Chapter 3: Manufacturing, where materials become products and their cost travels with them every step of the way. This is where your books learn to follow work in motion. Manufacturing turns raw materials into finished goods through work in progress, a holding account that quietly collects material, labor, and overhead until the job is done. Here is how you use it. You define the recipe, open a work order for a quantity, issue materials to the job, book time on the shop floor, and pass quality checks along the way. And at the end, you can prove, not guess, what each finished unit truly costs to make. That proof is the heart of this module. The building blocks: bill of materials is the recipe, and the recipe price is nothing. Work orders are the jobs that collect cost. Planning and MRP decide when to build and what to buy. Routings, the shop floor, and subcontracting do the actual work. Quality and lots keep every batch traceable, and job costing proves the rupees per unit. 8 blocks, 1 job. Now the accounting. Plans post nothing at all. Issue materials and 10,000 rupees moves. Debit work in progress, credit raw materials, finish the job, and 14,000 lands in finished goods. Materials plus labor and overhead. Asset to asset, every step, the P&L is still untouched. Only when the units sell does their cost become cost of goods sold. Step back now and see the whole thread across all 3 chapters. Buying creates an asset on your balance sheet. Making and moving simply shuffle value between assets. Location changes, form changes, the total does not. Only selling or scrap or a shortfall in the count ever touches your profit, and every entry balances. Debits always equal credits. That's the inventory suite: value, place, and transformation. 3 lenses that always agree with your books. If your business buys, stores, or makes stock, this is where it adds up. Get started today at hellobooks.ai.